Time for our second quarterly performance update of 2024. I'm with Asset Management Director Jacob Reynolds and Head of Asset Management James Timpson to talk us through how things have been through the last quarter. James, if we can start with you, it looks generally like a positive quarter for Courtiers funds. Can you tell us more about that?
Yeah, it's actually been a really eventful quarter. So back in April, we had some volatility in the markets due to tensions in the Middle East, but the markets really picked up in May. That's when we saw lots of investor confidence that we were going to see rate cuts throughout the year. The FTSE 100 reached a new all-time high. The inflation in the UK came back down to its 2% target. And then in June, we saw a bit more volatility in markets, partly due to the European elections. But as you say, it has been a positive quarter overall. So the cautious fund, the balanced fund and the growth fund, they all returned between 0.7 and 0.9% during the quarter, which brings their total return for the year to date to 5.8% for the growth fund, 4.2% for the balanced fund and 2.6% for the cautious fund. So it's been a positive year so far.
Jake, James mentions elections. How's that been rocking the markets and the work in your team?
Well, yeah, there's elections everywhere really in very key economies this year, and everyone has turned their eyes on that. The one that rocked markets, and this is what we touched on with our election update, is that as long as things play out as expected, you don't have to worry too much. And the comparisons between Europe and the UK at the end of May and beginning of June was really apparent, where the UK election was known. It was just a case of when, not if. And markets carried on. You know, the UK fund, I think it was 5.87% was up this quarter, and as James alluded to, was going the FTSE 100 has gone to a new all-time high. But the difference with France, where President Macron has had to call a snap election, well, he has called a snap election off the back of a big loss in the European elections, has rocked markets. So Europe in general was having a really good quarter up until the end of May, and then it gave that back because the election was unexpected. You have the possibility of Marine Le Pen's national rally getting in. That looks less likely now on Sunday, but they still took the majority of the vote. So you see that comparison of when things are known, UK goes on as fine, and you know we had some positive GDP growth, and that really pushed markets up. And versus Europe, where it's unknown, and therefore it really rocked markets, and particularly the domestically focused stuff, which will benefit from the rates being cut down the line. But you can see also that the GDP growth benefits the small caps. The small caps is what drove the UK fund up to 5.87%, and you know the multi-asset funds have a position in that and benefited from that as well.
You mentioned small cap. This is smaller companies, and this is value investing.
Yeah.
And there's been a shift in the interest in the US to the smaller companies versus the larger ones. James, can you tell us about that?
Yeah, so one of the ongoing themes that we've seen for about the last year and a half really is the ongoing dominance of those large US tech companies. And that has continued throughout the quarter. So the S&P 500 index, which measures the large cap companies, that's returned over 4% during the quarter, whereas the medium and small cap indices in the US, they've both lost around 3%. So the sort of gap in premium or discount between the large and small companies is so big now. In fact, it's the largest it's been since the tech bubble back in the late 90s. So this has presented an opportunity for us. So we've actually dipped our toe into the US small cap market. We've invested in the S&P 600 small cap index, which gives us exposure to those small cap companies. It just helps to diversify our US exposure even more, so that we're not so heavily concentrated in those big tech companies that have become so expensive now.
Thank you, James. And I just want to turn to a UK election tomorrow. How are we going to be responding to that?
Yeah, well, James and I were debating what time we get in on Friday, and it will all be dependent on those exit polls at 10 p.m. If it's a Labour majority, that's what the market expects right now. Should be fine, that's expectation. But if that swings to Conservative or Reform or Lib Dem, you don't know which way it's going to go, then we'll have to get in before market open and see how it gets digested, and that'll be how the market interprets their manifestos and what they're going to do over the next 4 years. Gary will be providing an update on that early Friday morning.
Brilliant. We'll look forward to publishing that out. Both of you, thank you very much for your time again this quarter. and for your insight. If you do have any questions, please contact your advisor or contact us through the website. And thanks for watching.